Hello everyone and welcome to ICM's midday session. It's been quite a bit in the markets earlier today with currency pairs mainly trading inside this a slight consolidation zone while equity futures around the world continue to cheer Biden's win, and we're seeing positive or risk on mood in the market. And in terms of economic indicators, we didn't have like noticeable economic indicators earlier today, and the market definitely had no had slight movements. So we can see in front of us the euro dollar is still trading inside the 30 pip range since late Friday. It's almost 1863, 1896, 1899. So we're trading inside the 30 points range. If we were able to break below the support of 1860, which was also a significant support earlier, we could retest 1793, while further gains or further bullishness on the pair could drive the prices higher to its previous stops, previous resistance, especially 1960 120 area as a key resistance area coming forward. So these are the key levels if you are trading the euro dollar. I'm just going to add technical indicators so you can see how the market is reacting. So if you just use the 1 hour chart, you can see how the Bollinger Bands there are just closing into each other, and the steepness or the slope of the moving average is almost null, meaning that the market is trading sideways for the past while. We're using the 20 period for the Bollinger Band. That's why the moving average or the middle line is the 20 simple moving average, which is slopeless currently. So this is for the euro dollar. Moving the British pound against the United States dollar, almost similar formation. We're seeing a sideways move. We can point the bottom of the range to almost 30, 130.90, and the top of the range 131.97, 132. So we are trading inside the 100 pip range. Any further declines or any drop below the support zone or a break below the lower band of the Bollinger Band, the lower line, could lead to a retest toward the 100 and 200 hour exponential moving average, which currently is sitting near 3060, 3040 area, and further declines could lead to a bigger correction towards almost 129, 129.20, 129.50. So this is the area. While on the positive scenario, I'm just going to delete the indicator so it's clearer for you. So you can see here this top that we're currently, that's the top of the range that we're trading at. So next resistance you have to expect it near 3260, 3270, which was a previous stop back in August. So this is these are the key levels if you are trading the British pound against the United States dollar. Moving to the dollar yen, on the bigger picture, we're trading. We're almost coming back to the channel that we were trading below it. So you can see here we're currently at the channel. Had a rebound or a certain correction. We're almost at the approaching 23.6, so you can see almost 23.6 in the bottom of the channel. They are coinciding, so this point is key or pivotal for the dollar yen. The next resistance comes in near 104 level, which was also a key support zone for the past couple of weeks. So watch out for any break back above 104, which could open the way towards or pave the way towards further highness towards 105. 105 level. While further move to the downside or further bearishness, we can just go for an extension, Fibonacci extension, and it pinpoints the 102.60 level, which was also a key level previously. If we just go to the daily chart, you can see here how also it was an important level previously. So these are the key levels if you are trading the dollar against the Japanese yen. I'm just going to go towards smaller time frames and add these indicators. We're approaching the 100-hour exponential moving average, finally following a break over the 100. We're approaching the 200. We're currently in the middle, so watch out for any sideways move here where we can retest the 200 and maybe have a little bit of a correction of this move to the upside. So this is for the dollar yen. The dollar against the Swiss franc, also same formation. We're trading inside the certain consolidation zone between almost 90.20 and 89.80. So this is almost a 40 pip range. We have also a smaller range between almost 90.10 and 89.80. So these are the ranges that we're trading at. Any further rally to the upside or break above the resistance zone of 90.10 lead to further upside movement towards the 100-hour exponential moving average, which currently sits at 90.30, and then to 90.50, the 200-hour exponential moving average. While further bearishness on the pair could drive prices lower towards, we can highlight using we just grab the Fibonacci extension, we can set the levels that could be we could be finding some support at 89.40 and 88.50. These are the levels to watch out for in terms of any break further to the downside for the dollar against the Swiss franc. The Australian dollar is still trading also inside a consolidation zone, 72.40, 73. So this almost 60 pips range we're trading at. Further declines or a drop below the support zone could lead to a drop, a bigger one towards 71.40 and 70.49, while further appreciation could drive the pair higher towards almost 73.40. So these are the levels for the Australian dollar against the United States dollar. If we just go for the hourly for some indicators, you can see how the market, also the Bollinger Bands, they're closing and hinting to less volatility on the day. The New Zealand dollar is still strong relative to other currencies, but also we're trading sideways up almost still. The past couple of hours, we didn't witness any key price action. We're just sitting slightly above the 20-hour simple moving average. Any break below it or any break below the trend line that's combining the previous bottoms, which we're currently sitting at, could lead to a bigger correction towards at least the 100-hour exponential moving average, 67.40, which was earlier a key resistance area. So this is the key on the downside. While further bullishness could lead to the previous resistance zone near almost 69.40, which you can highlight if you just go to the weekly chart. Since it's a while we didn't reach this price range, so it's almost 69.30, 69.45. The dollar against the Canadian dollar is also losing ground. So just by looking at the chart, you can see how we're approaching a key support zone, which we were trading at earlier in September, which is almost the 130 psychological level. We expect here a bit of support. Maybe since it's a round number, we have to expect some price action. So the 130 as a key level for traders, 130, 129.80. So this is the area around. Well, if you want to highlight the numbers surrounding for any reversal or any move to the upside, we can hint for resistance near 30.80 and 31 level. So this is this 20 pips range, 30.80 and 31 level could be the coming selling zone or selling pressure. On the daily chart, you can just see the previous support zones. Previous bottom reached December in 2019. It's almost 29.50, which could be the coming price level that we have to test if we were able to break below the 130 psychological level. On smaller time frames, you can see a clear trending market to the downside, a slight sideways during the past couple of hours, but still we're trading between the 20 simple moving average and the lower band of the Bollinger Band, hinting to negativity on the pair of performance. Any break back above the upper line of the Bollinger Band could lead to bigger correction towards the 31 area that we talked about. Gold had some positive solid gains in the morning, but on the picture we're almost consolidating inside the kind of wedge that we're trading at, and the movement is a bit narrowing. During the past couple of hours, it narrowed a little bit. So we had this upside move. It was steep and clear, and then here we're posting higher highs and higher lows, but it's a sideways up movement and not a movement supported by stronger momentum. So watch out for any break back below the trend line combining the previous bottoms, because it could lead to a further drop towards at least the 100-hour exponential moving average, which currently sits at 90.30, which was also, we can remember the 90.30, it was a key level earlier, key resistance level, and upon the break of 1930, we witnessed this rally towards 1950 earlier and then 1965 today. So this is for the downside levels for gold, while on the upside, definitely 1973 continues to be one of the targets to watch out for and further bullish movement. So I'm just gonna go to the daily chart so you can see it better. So this is the 973. These previous stops for gold, they are the targets for longs. So this is for gold. Silver, on the bigger picture, we're still trading inside the channel, slightly on the upper side of the channel. So watch out for any reversals here. On the smaller time frames, you can see a steep movement to the upside, slightly sideways up move similar to the one that we're witnessing in gold, but still having momentum. So you can also draw this trend line combining the previous tops. We're currently trading sideways near it, and since we're losing volatility and losing momentum, we could expect some sideways move until we have some fresh drivers coming in. Dow Jones is extending gains. We're trading almost near 28,700. It's a very, very straight upside move. You can just draw also a trend line. It's very clear that the market is having a bigger correction, almost erased all the gains incurred during October, and we're heading higher towards almost 29,000. We can just also draw the channel that we're currently trading at. Just go to smaller time frames, you can see that following this sharp upside move, we're trading currently inside the channel combining the previous tops and previous bottoms. So watch out for any retest towards the upper band of the channel near 28,900 for possible corrections, and any break back below 28,300 could trigger further selling pressure, maybe drive the pair towards the previous support area near 27,000, drive the Dow Jones, towards the previous support area near 27,750. So these are the key levels to highlight. This is the formation on the Dow Jones, and you have to, if you're following and you're trading on the Dow Jones, you have to take it into consideration. Oil is recovering a little bit today on optimism over some possible cuts from top oil producers in order to stabilize the market following the recent lockdown measures followed in Europe. So we're almost having a reversal formation, a slight reversal formation, but currently we're trading near a key level, almost 38.80. It was a key support earlier, and now we failed to break above this zone for the past since Friday, for Thursday and Friday. So any break above it could lead to a retest towards the previous resistance zone near 39.40, which was also a key level while the market was trending lower. 39.50 is a key, 39.40 is a key level for oil, while another dip towards 37.80 could lead to further bearishness on oil and a decline towards 37 zone. So these are the key levels if you are trading oil, and you have to focus on these levels for the intraday. Mainly, this is all for today's midday session. We're gonna be having a week ahead in a while, so also you can join it in order to know what's coming ahead throughout the week and have a bigger analysis on the bigger time frames. If you just want to get informed for the coming live sessions, you can just subscribe to ICM Capital and activate the notification bell. So this is all for today. Thank you all for joining.